Hello, in this video I'm gonna walk you through the financial model Excel template. I will show you the main inputs, the core outputs, reports and charts. So let's get started. On the dashboard you can input core inputs or drivers for the model. You can also review the core financials and see the core charts related to the model. So let's start from the setup of the model. First of all, you need to define on which categories you would like to see your revenue. It can be different products like product 1, product 2, etc. Or it can be different markets. So in other words, it can be market 1 or segment 1. Whatever segmentation you need to use, you have 5 different placeholders. For each of these segments you can input the launch date. This means that starting from this date your sales will start. You can change this value, for example April 20. You can change this for October, September, November, December, something like that. You are able also to change your sales volume in terms of units by these markets or products. You can set up it, for example, 500 for the first year, then 700 and 900. Once you change these sales volumes, you can see immediately the charts with revenue, profitability will be changed. So it is connected with all the charts and core financials. Additionally, you can set up customer acquisition cost, or how much, what is the percentage of revenue will be your pay-per-click or another way of marketing. In other words, 27% of your revenue will be spent on marketing. Separately, you can set up the wholesale share and retail share. Retail share will be 100% minus your wholesale share. This means that if you want 50% of wholesale and 50% of retail, just input for wholesale 50%. This is also changeable by years and by markets or products. And separately you can set up the wholesale and retail prices for these markets, products. Let's say $50, $55, $60. So once you set up this, on the dashboard you may see the weighted average sales price depending on the shares of your wholesale and retail and the prices on wholesale and retail. Additionally, you can set up the safety stock and working capital assumptions, which is production time, which is payment upfront or first prepayment before production, the payment share, upfront payment share means, and cash receipt days. All these values are used to calculate your inventory and accounts receivable and accounts payable, which you may find here in the balance sheet. Additionally, you are able to set up the sales seasonality assumptions, which means you need to spread your sales across the year. If you don't need any seasonality, you can just set up 1 divided by 12 and you'll have no seasonality in the model, which means all the months will be equal. Additionally, you have the check here, so if you input something wrong and if the total amount is not 100%, it will show you the red color that something is wrong here. So once you set up all the pricing assumptions, product assumptions, seasonality, wages, COGS, variable expenses and fixed expenses, you may review your dashboard with core financials, with your charts and the main KPIs related to the business. On the financial charts tab, you may see 2 sets of charts with breakdown of some KPIs by 12 months or 3 years by months. So on the first set of charts, you may see the EBIT by months. The next one will show you the EBITDA breakdown with revenue, COGS and OPEX, and the blue resulting line EBITDA. The next set of charts will show you the operating cash flow broken down by cash inflow and cash outflow. The next set of charts will show you the cash balance by months. On the next, you will see the sales units by different products as a stacked charts. You may see on these charts and review the seasonality factor, for example. And on the next and the last one set of charts, you will see the revenue breakdown for the same products. Again, on these charts, you may see the seasonality of your sales. On the burn tab, you may see the chart and calculation of your cash burn ratio, which is based on total operating cash out and average annual cash balance. Finally, on the KPI benchmarks tab, you may see the industry benchmarks KPIs. So you may set up industry benchmark which works for your country, region, or specific industry. For example, you know that specifically for your business, industry specific benchmark is 80%. So we just update it, and you may see that on the chart with industry gross margin and calculated gross margin, it is updated to 80%. In the same way, you can update wages as a percentage of revenue, EBITDA percentage, inventory turnover ratio, and average days to sell. The values calculated based on the model assumptions you may see in here, and in all the charts you may see that blue value, this is value calculated by the model, and this orange value, this is a value as a benchmark KPI or industry specific KPI for your business. On the income statement tab, you may see your main components of your profit and loss, which is total revenue, total cost of goods sold, gross margin, total variable expenses, total admin salaries and wages, total fixed expenses, EBITDA, depreciation and amortization, EBIT, interest expense, net profit before tax, your corporate tax, and as a result, net profit after tax. Please note that each category has its own subcategories, so you may click on this plus button and see the detalization, for example, for fixed expenses, or for variable expenses, or for example for the revenue. On the cash flow statement, you may see your cash flow broken down by cash flow from operating activities, cash flow from investing activities, and cash flow from financing activities. The same information you may see on the cash flow statement in indirect method, operating, investing, and financing activities, but in more collapsed form. Just easier to see the information here. And the balance sheet will show you the breakdown of your current assets, non-current assets, current liabilities, non-current liabilities, and equity by its subcategories. The summary of three statements you may find on the Financial Statement Summary tab. On the top you have income statement broken down by 5 years, and the selected year, which you can change here, broken down by months. Below you may see the same information on the chart form. The next set of tables and charts will show you the balance sheet, main KPIs broken down by 5 years and selected year by months. And the last part will show you the cash flow statement breakdown for the 5 years and for 12 months for the selected year, as well as charts with the same information. On the top revenue tab, you may see the breakdown of your revenue by products and also by years, with absolute values and percentage breakdown. The same information you may see on the charts below. Here you may see the percentage breakdown and absolute values breakdown. Below you may see the revenue depth and monthly run rate chart. You can select the year, and based on this year you will see the information of revenue by products as absolute values and percentage revenue breakdown on the pie chart. On the revenue bridge you may find the main revenue drivers of growth. You may select the first year and you may select the last year, and between these years you will see the waterfall chart, and you may see which are the main drivers of your revenue growth, which specific products grow faster and which specific products grow slower. On the top expenses tab, you may find the breakdown of top 4 expenses categories, and all other expenses collapsed into other category. You may see the breakdown of absolute values broken down by years with a total below, and also to the right you may see the percentage breakdown of these expenses. The same information you may see on the charts below, which you may find the percentage breakdown and the absolute values breakdown. On the couple of charts below you may find expenses depth and monthly run rate for selected year. You are able to change this year, and you may see the absolute values and percentage breakdown on the pie chart. On the expenses bridge you may find the main drivers of expenses growth between these 2 years. These years are also changeable, so you may select the first year and you may select the last year. And you may see that total expenses starting in 2020 will change to total expenses in 2024 by this waterfall. On the break-even tab you may find the calculation of revenue break-even level and break-even chart. For this particular use case, you may find that your revenue break-even level is less than actual revenue calculation. This means that company is profitable. On the valuation tab, you may see the calculation of company valuation based on the cost of equity, which you may input here. Cost of loans you previously inputted on the dashboard. Calculation of resource share you may see here. There's also tax rate, and here you may find the weighted average cost of capital. In the valuation model there is 2 valuation methods, which is EBITDA multiple and revenue multiple. You may select one of them, and below you may input multiple of methods. Based on this information we can see terminal value, which is calculated on unlevered free cash flow. You may see the present value of unlevered free cash flow, NPV, and multiplicator valuation for this particular company. The color coding in the model is very simple. You may change any yellow cell in any yellow sheet within the model. This means that this yellow cell has some input, assumption or driver which impacts the calculation within the model. Blue sheets means that on these sheets there are some charts, reports and other information which can be useful for reporting purposes. On the tabs without color you have some extra calculations related to revenue, to debts, equity, inventory and everything which is needed for the reporting. Additionally, you have Contents tab, which allow you to navigate across the model very simple. So you may click on any report and you can go back. It is broken down by reports, assumptions, statements and setup. There is short explanation about what each tab does, but if you want to know more, you can go to How To and to see more detailed explanation of what each tab does and what inputs you may find on this sheet and what kind of outputs you may find on this sheet as well. Any header of this section is also clickable. So you may click on, for example, Book Assets, and you go directly to this tab. On the COGS tab, you have up to 5 different components of your COGS and 2 ways of how to predict it or forecast it. So we have 2 options to forecast COGS as a percentage of revenue or as a dollars per unit. Let me give you a couple of examples. For example, manufacturing cost will be 25% of your revenue. Then you can set up as dollars per input, for example, package, which will cost you $1 in first year, $1.15 in the next year, and $1.25 in year 22. So you have 2 options, 2 placeholders for calculation as dollar per unit and 3 placeholders as a percentage of revenue. On the top you may see the drivers for these calculations, which is sales units and total revenue amount, and below you may see the calculation by months for these categories. As a summary, you may see in income statement under COGS section your COGS components broken down by line items and broken down by months. On the wages tab, you can input your headcount by categories with hire and fire date, with annual salary, with ability to input different number of employees by years, with annual salary rise percentage, with monthly bonus and tax rate. Let me give you a couple of examples. Let it be CFO, which you are going to hire in March 20. You're not going to fire him, so the fire date will be December 24. So annual salary can be $50,000, and this will be one CFO over the time. So you may see one CFO, which is one headcount, starting from March till the end of the model, which is December 24. Also, you can input 5% of salary growth rate. You may see the amounts by years connected to this annual salary and impacted by annual salary rise. Let's set up 10% monthly bonus and 5% of tax rate. So you may see below the calculation of salary broken down by months, monthly bonus, which is 10%, and 5% of monthly taxes related to the payroll. Another option, let it be admin headcount, which will start in April, which will grow till the end of the model with annual salary of $30,000. Let it be in year number 1, 2, then 4, 6, 8, and 10 headcounts. 3% of annual salary growth, 5% of monthly bonus, and 5% of payroll tax rate. So in here you may see total staff numbers, which is 2 for the year number 1, 2020. Starting from year 2021, you'll have 4, then 6, 8, and 10 in the last year of the model. Again, calculation of salaries for these two, in this case 4 headcounts, calculation of bonuses, and calculation of monthly base taxes. You may see an income statement, total salaries and wages, and here you may see the total amount of bonuses, payroll taxes, and wages for these headcounts. On the Fixed Expenses tab, you may input up to 15 line items for your fixed expenses. Let me show you how it works. For example, you have utilities. You will start pay starting from March 20 till the end of the model, which is December 24. You may see it here. Let's pretend periodicity will be daily with amount of $50 per day. So you may see these amounts in here. It is calculated based on count of days within this month. So obviously in March 20 you have 31 days. That's why you will have 1550. In April you have 30 days. This means this will be $1,500. Also, you have ability to input some growth rate year over year. Once you input this growth rate, you will see that your utilities will grow over year. Let me give you a couple of other expenses types. For example, advertising. Let it start in March and finish in August 24. This will be on weekly basis with amount of $100 without any growth. So starting from March till August 24, you have $400 per month, which is 4 weekly payments each month. And that's it. Another option is bi-weekly. For example, $500. You can start from July, for example, and you'll have 2 payments, which is 2 biweekly payments within the month, $500 multiplied by 2, you have $1,000 per month. Again, you can input some growth rate and you will see that your advertising expenses will grow year over year till the August 24, which is the last date of this expense type. Another option, office setup, which can be one-time payment, which will happen in February 20 with amount of $5,000. Obviously, you should not input any growth rates because this is just one-time fee, and you may see that office setup will happen in February 20 with this amount. Another option, insurance, let it be start from January 20 till the end of the model, and it can happen monthly with $1,000 per month, with 5% of growth first year, 3% of growth second year, 2% of growth third, and 1% in year number 4. So you may see this calculation here. Starting from January 21, it will grow for 5%, which is $50. And starting from January 22, it will grow for 3%, which is additionally $32. Another option, quarterly. You may see that insurance will be paid $1,000 each quarter. You can start it, for example, from February, and this will be shifted to 1 month forward. Another option, semi-annually. In this case, you will have insurance payments once per half a year, again with a percentage of growth. And the last option is annual payments or yearly payments. You'll pay one time per 12 months, starting from February till December 24. For each expense type, you can use growth rate, and the calculation you may see in here. Also, in income statement, you may find total fixed expenses group. If you will ungroup this section, you can see these amounts broken down by months and by fixed expenses line items. On the variable expenses tab, you may find up to 6 line items to set up your variable expenses. The first line item you may see in gray color. This means this is connected to something. Specifically, this line item is unique and connected to the dashboard where you find customer acquisition cost. So this is set up as a percentage of revenue. So you may see that on the variable expenses tab, this is also connected to the dashboard. Additionally, you can input up to 5 other variable expenses line items, for example, direct labor. And you know that this is specifically 15% of your revenue. You may change it by years as well, like 17%, 19%. On the top, you may see the total revenue, which is basis of calculation for these line items. And below, you may see the calculation by months. The resulting point you may find in income statement, and under variable expenses you may see all the values broken down by months and broken down by line items. On the capitalization table, you can input different founders and investors' contributions, broken down by different dates of funding, with different cost of share for each series. And you can see the dilution of shares after each round, and pre-money total equity and post-money total equity. Let's pretend that we have 2 founders, founder 1 and founder 2. So total amount of shares for founder 1 can be 10,000, for founder number 2 20,000. Let's imagine that cost of share will be $2 and the date of founding is February. This means that investment for founder 1 is $20,000, for founder 2 is $40,000. In total, they invest $60,000, which you may see here. The dilution is 33 to 67% of shares. So let's pretend that for Series A we have 1 investor, and the date of issuance is May. Cost per share is $5 per share, and number of shares is 1000. So total amount of investment will be $5,000. You may see that before the Series A, total equity was $60,000, after is $65,000, and investor 1 will have 3.23% of shares, and the shares of founder 1 and founder 2 also diluted, 32.26 and 46.52%. You can also input some amounts for Series B and Series C. The same way you can set up the date, cost of share, and up to 5 investors is up to 5 placeholders for number of shares. The amounts of funding you may see in the cash flow, in the ordinary equity risings, and you may see the balance sheet, which shows you the total equity by months. On the Assets tab, you may input up to 7 assets line items and change this accordingly. For example, for the line item number 1, office expenses, you can set up the launch date for this asset type, for example March 20. You can input useful time years, let's say it's 1 year, and the asset cost, for example $50,000. So you may see in the calculation below the capital expenditure, which is in March 20. You may see the calculation of book depreciation for 1 year according to the useful time. If you will set 2 years, for example, you will see that it will be amortized fully for February 22, which is 2 years from March 20. And you can see the closing net book value of this asset. Additionally, you can input up to 6 other assets line items. So in income statement, you may find the depreciation and amortization amount for each month. On the cash flow, you may see the fixed asset capital expenditure. And on the balance sheet, you may see the total closed net book value for these assets. Also, on the top of the dashboard, you have debt assumptions. Let me show you how it works. So for each debt, you are able to select the debt type. There are 2 debt types in the model, which is annuity and usual. Annuity means that each monthly payment, which consists your debt repayment plus interest expenses, will be equal each month. In case if you will select usual, your main debt repayments will be equal parts, and interest will be just interest on the debt's closing balance. Let me give you an example how it works. So you may input some amount of the debt, the launch date, term will be 60 months, and interest can be 5%. You may also input the grant, which is just simple amount, which is paid in some specific months, and that's it. No repayments, no terms in terms of interest. So all the calculations of the debts you may see on the capital tab. Calculations for the debt number 1, debt number 2, debt number 3, total debts with grants. These calculations impacts income statement, interest expenses, the cash flow, interest paid, debt drawdowns, debt repayments, and on the balance sheet you have the debt closing balance. On the top of the dashboard you have currency, denomination, and taxes setup. So currency inputs means that you can input all your drivers for the model using one currency. You have currency outputs. It can be the same as currency inputs, and it can be different from currency inputs. So let me give an example. When you input in United States dollars, you have euro as an outputs, and for this case you can set up currency exchange rate. This is 1.2 for example. In this case you will have in the model all your inputs in United States dollars, all your outputs in euros, and there will be a conversion rate between currency inputs and currency outputs. Additionally, you have denomination, which means that you can denominate all your outputs on the reports. In this example, you have denomination is 1000, means that your outputs is denominated by 1000. You can select millions. You may see that now it is in $1 million. You can set also billions or without any denomination. Additionally, you have corporate tax setup. You can change this number and this will impact tax expenses in your income statement. I hope you enjoyed my video. Thanks for reviewing this. You can find more on my website finmodelslab.com, and we'll see you later in the next videos.